Investing in equities is an important investment that we make to generate inflation-beating returns. This was the conclusion we drew from the previous video. Having said that, how do we go about investing in equities? Clearly, before we dwell further into this topic, it is essential to understand the ecosystem in which equities operate. Just like the way we go to the neighborhood kirana store or a supermarket to shop for our daily needs, similarly, we go to the stock market to shop for equity investments. The stock market is where everyone who wants to transact in shares goes to. Transact, in simple terms, means buying and selling. You can't buy, sell shares of a public company like Infosys without transacting through the stock markets for all practical purposes. The main purpose of the stock market is to help you facilitate your transactions. So if you are a buyer of a share, the stock market helps you meet the seller and vice versa. Now, unlike a supermarket, the stock market does not exist in a brick-and-mortar form. It exists in electronic form. You access the market electronically from your computer and go about conducting your transactions. It is also important to note that you can access the stock market via a registered intermediary called the stockbroker. There are two main stock exchanges in India that make up the stock markets. They are the Bombay Stock Exchange and the National Stock Exchange. Besides these two exchanges, there are many other regional stock exchanges, like Bangalore Stock Exchange, Madras Stock Exchange, that are more or less getting phased out and don't really play any meaningful role anymore. The stock market attracts individuals and corporations from diverse backgrounds. Anyone who transacts in the stock market is called a market participant. The market participant can be classified into various categories. Stock market participants are domestic retail participants, NRIs and OKI, domestic institutions, asset management companies, foreign institutional investors. In India, the stock market regulator is called the Securities and Exchange Board of India, often referred to as SEBI. The objective of SEBI is to promote the development of stock exchanges, protect the interest of retail investors, and regulate market participants and financial intermediaries' activities. In general, SEBI ensures the stock exchanges conducts its business fairly. Stockbrokers and sub-brokers conduct their business fairly. Participants don't get involved in unfair practices. Corporates don't use the markets to unduly benefit themselves. Small retail investors' interests are protected.
Large investors with huge cash piles should not manipulate the markets.
Overall development of markets. SEBI has prescribed a set of rules and regulations to each one of these entities. The entity should operate within the legal framework as prescribed by SEBI. The specific rules applicable to a specific entity are made available by SEBI on their website. Entity is credit rating agency. Example of companies are CRISIL, ICRA, CARE. They rate the creditworthiness of corporate and governments. Entity is debenture trustees. Example of companies are almost all banks in India.
Act as a trustee to corporate debenture.
Entity is depository participant. Example of companies are most of the banks and few stockbrokers.
Act as an agent to the two depositories.
You cannot directly interact with NSDL or CDSL. You need to liaison with ADP to open and maintain your demat account. Entity is foreign institutional investors. Example of companies are foreign corporate funds and individuals. These are foreign entities with interest to invest in India. They usually transact in large amounts of money, and hence their activity in the markets have an impact in terms of market sentiment. Entity is merchant bankers. Example of companies are Karvy, Axis Bank, Edelweiss Capital. If a company plans to raise money by floating an IPO, then merchant bankers are the ones who help companies with the IPO process. Entity is asset management companies. Example of companies are HDFC AMC, Reliance Capital, SBI Capital. An AMC collects money from the public, puts that money in a single account, and then invests that money in markets intending to make the investments grow and generate wealth, also known as mutual fund schemes. Entity is portfolio managers, portfolio management system. Example of companies are Reliance Wealth Management, Parag Parikh PMS. They work similarly to a mutual fund except in a PMS, you have to invest a minimum of Rs 2,500,000. However, there is no such cap in a mutual fund. Entity is stock brokers and sub-brokers. Example of companies are Zerodha, Angel Broking, ICICI Direct. Whenever you want to buy or sell shares from the stock exchange, you have to do so through registered stock brokers. A sub-broker is like an agent to a stockbroker.